Hi everyone, I am Pavan and welcome to my new channel, The Path to Financial Freedom. The core belief of this channel is to empower everyone in achieving their financial freedom by promoting financial literacy. I believe wealth creation at its core is rooted in financial discipline. It's not about earning a fortune or inheriting one or striking big in Bitcoin or stocks or any one specific thing. Am I saying that wealth is not created in one of those ways? No, I'm not saying that. It's actually far from it. I'm saying wealth sustenance over a long period of time certainly won't happen with just one of those. It requires more than that. Almost all the households, individuals, corporations, governments, whoever is financially successful or are acclaimed to be wealthy have one thing in common. They all have impeccable financial or fiscal discipline. They do focus on small, little, boring daily habits. They admit when they fall to their temptations. They correct a habit when it's hurting them financially. They dream and make sacrifices to achieve those dreams. On this channel, I plan to discuss my personal investments in stock and cash holdings, gains or losses. At the very minimum, I commit to providing you all a monthly transparent portfolio update. Further to that, if there are significant changes that I make in my portfolio, I shall publish additional episodes where I'll delve into the details of my thought process and goals behind making those adjustments. If that kind of content is interesting to you, please subscribe to the channel and do share your thoughts in the comment section. Before we get started, let me confess I am not a financial advisor or CPA. I would highly encourage you all to do your individual research and seek financial advice from a competent financial advisor before you make or arrive at investment decisions. In today's episode, I will share with you all my growth portfolio which I've created with M1 Finance platform. Thanks to Joseph Carlson and his channel for introducing me to M1 Finance platform. Let's get started. Here it is, my growth portfolio on M1 Finance. I've started this in May and have since seen more than $1,500 in gains, with a majority of gains from capital appreciation and about $9 something in dividend returns. On August 31st, I've decided to reorganize my individual stock holdings into some of these slices. This is a cool feature that M1 Finance offers. I view these slices as ETFs, which I am operating as a fund manager, which is a fun way of managing my investments. Anyway, it turns out I cannot do the portfolio reorganization by myself and allocate them into these slices. So I had to hop onto a call with the M1 Finance support. Those guys were really helpful, and the whole thing needed about a few hours and it was all done. One negative impact of this process is the loss of performance history for the portfolio that was built since May this year, which is very disappointing. It would be great if M1 Finance can fix this soon and offer a way to retain the portfolio performance as long as the underlying positions are not sold. As you can see, I've created these 7 slices in my portfolio and organized the various individual holdings into one of these slices. I've also allocated a target weight for each of these holdings. The weight is primarily depending on my conviction and risk appetite on each of these slices and the current value that I perceive of the underlying holdings as of today. So once I've done this, like for example, I'll go into the streaming and media experience. I have Disney, Spotify, and Netflix, all great companies that I believe are poised for great growth. So I have these individual holdings in the streaming and media experiences slice, and within that slice I have again target allocation for individual holding, and at the Uber portfolio level I have a 13% target allocation for this specific holding. So I have similarly 32% allocation for big tech and 2% allocation for convenience services like DoorDash and Airbnb. If you're interested in knowing my individual holdings in all these 7 slices and their specific target allocation, then I shall leave a link to my portfolio in the description and you all can check it out. For the longest of time, I've been a dividend investor and hold another portfolio focused on dividend growth in Fidelity. But then something happened in the first few months of this year. I've started to observe rapid escalation in commodity and essential prices, and then I also started to witness these headlines like, on the Washington Post, Michael Burry goes on to warn that inflation is not transitory. And then Kathy Wood of ARK Invest, she agrees but then believes that Bitcoin is a better hedge. And then Fed Chair Jerome Powell also starts to loosen his stance on inflation. As all these developments unfold, the total COVID-19 US stimulus commitment have soared up beyond $11 trillion, and the actual distribution has started to approach 5 trillions, and that's a lot of cash. And I was intrigued to understand how Americans were spending that cash, and this was a great website I found which had the detail. As you can see, across the various across the various rounds of stimulus that was distributed, most of the money in the first round was actually spent, and then in the second and third stimulus rounds, people used that cash to pay off debt, and towards the latter they've started to save it. But then, as you can see, depending on the income distribution of the household, that pattern has been varying. Personally, I've been building a cash position over the last year with the goal to incrementally pay off my mortgage. I've pondered over these inflationary trends, the low mortgage rates and low interest rates for a few weeks, and eventually decided to dollar cost average that cash position that I had and invest it into some high quality companies through the rest of 2021. That is how this growth portfolio was created. The goals of this portfolio are primarily to be an effective hedge against inflation. I have strong conviction that these high quality companies would outgrow the inflationary trend. The portfolio might have a short term setback, but in the long run, these high quality companies would outperform any inflationary trend. The secondary objective is for this portfolio to perform on par with S&P 500 returns or even exceed the returns over a 5+ year period. And lastly, I intend to grow this into a 7-figure portfolio over a 7 to 10 year time horizon. Given the original intent was for me to build a cash position to pay off my mortgage, if a good opportunity presents itself, I might sell off a portion of this portfolio to enter into another real estate property. But then I'll go with the time, see what lies ahead of us. This portfolio is relatively concentrated on technology stock, and as I am a technology product manager, I understand these companies, their products, and their product modes better. So I feel comfortable to have this concentration. Besides, as I said, I do have other portfolio where I have diversified beyond technology companies for dividend investing. That's all for today. Hope this episode was informative and helpful. I look forward to making more episodes, and let's talk money there. Do let me know if there are specific topics of interest, and I will try to cover them in the upcoming episodes. Thank you.